Hey there! Are you interested in investing in index funds, but not sure where to start? In this video, you'll learn everything you need to know about index fund investing from an expert. First of all, it's important to understand what index funds are. Index funds are mutual funds that track a specific market index, such as the S&P 500 or the Nasdaq. By investing in an index fund, you can get broad exposure to a particular market or sector, and potentially achieve returns that are similar to the overall market. There are many types of index funds to choose from, including those that track broad market indices, as well as those that track more specific sectors or regions. It's important to understand the differences between these types of index funds and choose the one that best aligns with your investment goals and risk tolerance. So, how do you choose the right index fund for you? Here are a few key factors to consider. Objectives: determine your investment goals and look for index funds that align with those objectives. For example, if you're looking for long-term growth, you may want to consider an index fund that tracks a broad market index, such as the S&P 500. On the other hand, if you're looking for more targeted exposure, you may want to consider an index fund that tracks a specific sector, such as technology or healthcare. Performance: look for index funds with a track record of strong performance. However, keep in mind that past performance is not necessarily indicative of future performance, so it's important to also consider other factors such as fees in the index fund's investment strategy. Fees: index funds generally have lower fees than actively managed mutual funds, but it's still important to look for index funds with low fees. Higher fees can eat into your returns, so it's important to find an index fund with a reasonable fee structure. Diversification: look for index funds that offer diversification, which can potentially reduce risk. This can be achieved by investing in a variety of different securities, such as stocks, bonds, and cash. By considering these factors, you'll be better equipped to choose the right index fund for you. Remember, it is important to do your due diligence and research different index funds before making a decision. You may also want to consider seeking the advice of a financial professional if you're uncertain about which index fund is right for you. Once you've chosen an index fund, it's important to monitor it regularly to ensure that it's still meeting your investment objectives. Here are a few key things to keep in mind. Review the fund's performance: keep an eye on the index fund's performance and compare it to its benchmark and other index funds in its category. If the fund's performance is consistently lagging its peers, it may be time to consider other options. Review the fund's holdings: check the index fund's portfolio to ensure that it's still aligned with your investment goals. If the fund has made significant changes to its holdings, it may be worth considering whether those changes are in line with your investment strategy. Review the fund's fees: index fund fees can change over time, so it's important to keep an eye on them. If the fees have increased significantly, it may be worth considering whether the index fund is still a good value for your money. Rebalance your portfolio: if your investment goals or risk tolerance have changed, or if the index fund has become too large a part of your portfolio, it may be time to rebalance. This involves selling some of your index fund shares and using the proceeds to buy other securities to bring your portfolio back into alignment with your goals. By regularly reviewing and monitoring your index fund investments, you can ensure that they are still meeting your investment objectives and helping you reach your financial goals. It's also important to diversify your portfolio by investing in a variety of different index funds. This can potentially reduce risk and increase your chances of success. For example, you might consider investing in index funds that track different asset classes, such as stocks, bonds, and cash. You might also consider investing in index funds with different investment strategies, such as growth, value, or income. Keep in mind that diversification does not guarantee a profit or protect against loss. It's important to carefully consider your investment goals and risk tolerance before making any investment decisions. I hope this video has been helpful and has given you some insights on index fund investing. Remember to be patient and consistent in your investing.